Good morning, good afternoon, good evening. It's Taylor Watts from Watts Investing here, and I've had a bit of a break. I've been busy so we're doing a 2 for 1 this time. So we're going to do episode, 29 and 30. So going over both August and September dividends, and then moving on to talk about October dividends. I've been busy. Just freshly moved back from Queenstown, as stated in my last video. This one was uploaded actually just before I got a job. So got a job working in the finance sector, doing finance brokering. So I've been busy learning that up and trying to earn my paycheck. And also went through, or still going, through looking at housing and property. So me and my partner Trish have been kind of scouting the market, going to a bunch of viewings and just seeing what's out there at the moment. And we've actually put an offer on one of the houses here as well, and sadly something else got in the way of that. So, and we were going to offer on this one as well, but got beaten out just before we were ready. So, still in the market looking at opportunities. There's been some good ones and some pretty poor ones. I think we're going to go look at this one in the weekend and just have a gaze. Going through the learning process and talking to the banks and stuff, seeing what we can actually do, and kind of seeing where the market is and if it's smart to even jump in or not. But we've been keeping up the investing in the meantime. It's just been kind of taking up all of my time through the job and research and all this. So I've been fairly occupied, but I've been keeping up to date with the market and been continuing the investments. So this is where our portfolio stands for now. So in the last 3 months, we've been going through a lot of gains and a lot of losses. That there's just the Tesla stock split. Sharesies obviously haven't fixed the day for that yet. The line of how much we've invested to how much our returns are has been squeezing a bit. But that's right, our dividends are still growing. Our total return is actually negative in terms of capital gain unrealized, by actually quite a bit. That was about negative 400 the other day when I looked. But most of our gains are actually the currency, because if we check out the good old exchange rate, that's been absolutely booming the wrong direction for wanting to buy US stocks, which is quite annoying when they're down. But when kind of looked at this back in 2020, when the market crash hit and everything, and the exchange rate dropped to like a 1.3, 1.4. So I started heavily investing, not knowing, but speculating that this could be an outcome. And it's gone well in that respect compared to the capital gain. So it's cool. And then we've just got our dividends racking up, which is nice and cool. Total return, or simple return, is 16.15. It's a little bit different on our spreadsheet because we include our hatch, and the numbers we get here will be a little bit different to Sharesies, and the exchange rate is kind of hard to do with dividends. Like if I receive $1 US, I generally do the exchange rate roughly just when I look it up at that time. If I do it a day or two later, I'll just do the day, whatever it ended on or something. So there'll be some cents and dollars out there. But in better news, so since this is a double video, I normally do $25 a video to Triple M. So since this is a double, we'll do 50. I've had no subscribe growth because we haven't actually done anything on my part. So we'll just put the cheeky 50 US into Triple M and be on the way with that. So we'll bang that in. And boom. It's kind of good that we delayed our, video in a way, because I think Triple M's been absolutely tanking it a wee bit. So we might get a wee 20-30% discount on that, which is actually quite nice in terms of the dividend. It's over 5% now. And after the next one, should probably be a cent raise based on the trend. So just under 1%, dividend raise. And got 4 shares after that 50. Will be at 4.2 plus another, we'll be like 4.6 shares maybe. So our dividend of 4.16 will actually get a bit bigger, which will be nice. So we've had a lot of dividends. We'll go into the better spreadsheet to look at those, and we'll just give the portfolio a little overview. So Apple, we have got not much. We haven't actually bought too much, just one here and there over the past few months. So investment's still just rocking over a little bit over 10 shares. AT&T, we pumped a little bit in just down there yesterday, as it has dropped to like an all-time low. So we bought some more there. The dividend yield was actually, because of the big drops, even though they cut the dividend by heaps, the dividend yield's back up to where it kind of was here, just based on the price. So I thought that was a good point of advantage to really take care of. Coca-Cola, I think we bought recently, 10th of Sep, and I was actually meaning to buy one here because we just received a dividend from them, so I guess that's where the rest of our $5 goes. Colgate, I don't think anything too interesting. I think we bought at another kind of almost all-time low, well, not all-time, but recent 5 years. Fisher and Paykel has been just slowly going down, so we're buying quite a bit back here. I actually plan to buy some more next time I get paid. I've just been taking advantage of some other opportunities. Our high yield monthly dividends been dropping as well, so we've been buying here and there with some bigger purchases as well, doing 25, 27, and then a bunch of 3s and 5s, just returning the dividends. So that's growing quite nicely. Started off 28 cents, got to $1, got to 2, heading towards 3, and we should definitely be over 3 for the future ones now as well. Hallensteins, I did one investment, as we hadn't done one in a while. It had been kind of dropping slowly from 7 down to 5, so I thought I might as well get a tidy 1,000 put in there and just leave it at that for now. That's also because dividend was announced through the NZX website, so I looked at the annual report. Numbers weren't too bad, but the dividend is the main thing we care about there. So we don't plan to hold Hallensteins too longer term. That's just kind of, in a way, just a different terms of putting our cash somewhere to produce some money. It's quite a good one for now. SP500, we bought one little thing, I believe, recently. Just today, bought something little, just to tidy up the number to 640, and get those dividends increasing as well. I don't think we've really touched Johnson & Johnson, Mainfreight, or McDonald's, really. Microsoft, we put a whopper into recently, because they've been dropping like crazy, and their like numbers in terms of margins, revenue, profit, things like that, have been going the opposite way of the stock price, to a point where I believe they're quite undervalued, even in the macro environment that it is today, and they're doing massive dividend raises as usual, why we bought them in the first place. So we whacked, I actually thought we did more than that, but we actually only did a 20, a 5 and a 20 recently, and I guess the dividend, I thought we did a big hundy in there, but that must have been something else. I think it might have been NZX, because I think the exchange rate actually might have been why I didn't want to do too much into the US, because the exchange rate's gone like 33% from lowest to highest in the most recent few months. 33% the wrong way. Whereas couple that with NZX and some other New Zealand companies like Fisher and Paykel dropping 20-30%. They've all got their reasons for it, but just the potential gain on some of the stocks is just not right. Still even invested in a good old Tesla. So I took advantage of this, I guess. I keep saying took advantage. Hopefully they're all advantages. But the dividend yield is at 7%, which is a pretty big whopper. That's the one. I hucked 130 in there to increase our investment, and actually another 10 to get a tidy 600, just because a wee bit of OCD. We added another 33% roughly to our investment. So our dividend should be more than 33% higher, just because the stock price was also lower, so the yield was more. So I'm not sure if this $8 here actually... No, it was back in September, so that didn't even take advantage. Why do I keep saying take advantage? That didn't even include our recent buy, so this here will be actually closer to, like $11 or 33%. It'll be like $10.5, $11 kind of thing, which is quite nice actually. And again with Pepsi, I think we did a little buy just to cover the dividend as well. Nothing too special there. Vanguard, we've been just topping in because they're going the same as most of the companies, so we're just topping that up, getting 25 in, getting those monthly dividends increasing. Realty Income Corp has been absolutely shocking it down. I actually got to do some research on this one before I put some in, because it's not often, like, apart from the pandemic, Realty Income Corp in the past 5 years at least has kind of been pretty steady upwards, just based on their renting yield. And like they've had a few dips here and there, but they've kind of held a line of 66 there, or 62 rather, just all the way through. So it dropping this low deserves some research and put some money in, but I think we chucked about 15, 20 in, and good old Tesla. Haven't done too much buying recently. We've actually been pretty quiet, just taking care of some bills and whatnot. But we bumped it up to 3,100, so I think we popped a 50. Yeah, we popped a 50 in there, and we did a 50 back in August, but you already knew about that one. So yeah, we popped another 50, and we plan to keep putting more in there as well. We've got 13.7 here. I think we want to get that all the way up to 20 as soon as we can, really. Oh yeah, big thing you've probably noticed, or you probably haven't actually, but Somerset, we sold out of that. So based on just me saving up for a house deposit, so I'm investing less and putting more of my cash just ready in the bank. I've been still putting some into Sharesies that I plan to sell if the house thing does happen. Still kind of deciding on the proportions and what I'm going to do about that, if I'm going to sell out of everything but Tesla or Tesla and nothing else. And don't really know what I'm doing just yet. Depends on the housing opportunity and the numbers and all the grants and Kāinga Ora benefits and whatnot. But yeah, we sold out of Somerset, about $325 worth. I think we took maybe, after fees and stuff, a 5% gain. Just kind of looked at it, and it hadn't been performing how I'd expected in the short term, and saw the long-term opportunity is still, for me, obviously there, but just based on the short-term performance of everything else, other things have dropped way more than them, and the long-term performance is looking better in the future. So some things like that, I'm just like, I need to sell out of Somerset. It's not producing me much dividends, dividend-wise, and the long-term thing is there, but I think there's just better opportunities. The opportunity cost is just the main thing, really. And then Westpac, we decreased our holding by about a quarter, I guess. I think we sold 150, so now we've got 500 there, so a little less than a quarter, I guess. So we sold out of that. Price had a wee spike, so I thought I might as well take advantage of that as well. I'm really liking the take advantage today, aren't I? So we're still holding on to it just because it does have a quite high yield dividend. That's 6.2% based on a price increase as well, so as our actual yield on cost is a bit higher, so it's probably around 7-8. But yeah, we just took that out and put it somewhere else to be of possibly better use. Numbers look good when I was doing it in my own time, so see how that plays out. And that's been the main market moves of the last 2 months. Hatch is just same old, holding it steady, holding the shares in Tesla. Good old hindsight. Oh, it would have been nice to sell there and buy low, but can't really see that ever happening or going well, not knowing the actual future. But it's a good learning moments to look at and go, like in the future, if Tesla goes where I believe it will, it'll be nice to look back on this and go, I held my own and didn't sell even when it was very tempting. Not that it was there for very long, like maybe 2-3 days, but it went there multiple times and held pretty close to it otherwise. So it will be nice to just look back on this possibly in the future and be like, I didn't sell there, what a good lad. But it could also be the opposite and just be like, why the hell did I not? No. But, hindsight is hindsight. To the important part, I guess. So I've done some changes. I've kind of lost track of what I've been up to. It's been a while, so we'll just have a crack at it. So basically, Q3 is done. Hidden a total of 67 and 39 cents. It's a little bit lower than Q2, but that's just because Hallenstein's dividend's in there, so that really pays most of the difference. As Hallenstein's dividend was about $24.55, and we're about $19 short, so the Hallenstein's dividend is the main difference there. So if you take that out, the actual average is going up quite nicely and steadily. Q4, we'll fix it with that Hallenstein's one being in there again, so I think we'll smash the $100 mark, which will be sick. First time doing that, and not the last. In terms of the actual month, back in I guess July it was. Well, August. Yeah, we made the video in August about July to guess about August. We guessed 15 and we got 12.7. So I'll actually check out who got closest to that. So my guess was 15. I don't actually know if anyone else actually guessed. Oh no, we got Josh McCone here at 14.2. So he is the closest 2 months in a row, actually. So that's a pretty stunning effort. Even though he was the only other guesser, so he just had to go lower. We won't discount that. It's a good effort, getting closer than me, because I do have the best insight. As I already know what I've been paid in October, and I already know what's coming in November. I knew what stocks I was selling and buying, so it's a good effort to beat me. So good effort, Josh McCone. 2 months in a row, make it 3. Go on. Well, it won't really be 3 since I skipped one. I'm cheating a wee bit, but we'll get into October in no time. And then we had a whopper for September, 36 and 8 cents. So that's over $1 a day, which is nice to see coming in, really. You can see the big market turn here. So we've invested 15 back in 2021 over the year, and the portfolio value was that. So the rough total unrealized gain was up in the 40s. Good times, good times. Now we've invested almost another 5,000 more, and our portfolio value has gone up about 1,500. So kind of not what we wanted to see. But the dividend yield, based on what we will end up as, I'm estimating we'll end up at 300 or more. That'll bump our dividend yield higher, which will be quite cool. We'll just control that, set that. So that'll be quite cool to actually get this dividend yield bumping up, because it actually was kind of perfect on 2020 to 2021. And I think I've calculated based on the invested amount. Yeah, not the actual portfolio value. Still learning. Don't know what I'm fully up to, but we'll get there. So in terms of our dividends, we got our average dividends received, and this is divided by every month, so it's kind of not the best stat to have, because it's these first, I guess the first year is just kind of redundant. That's why we got the trailing one. So we've got our average going. I actually think I might have broken this, because I changed this to be like a little plus minus thing to hide all the things. So like whenever I want to add one, I have to scroll all the way down, and then I had to move all these to line up. I didn't have to move them, but it made sense for the data to line up a bit better. So I don't actually know if these graphs are correct. I did this while I was on break at work, just messing around, so I'm not sure if these are right. I believe they're close to being right. I think I did bug them up. I think this one is still right, because I don't really. Yeah, this one's still fine. I don't think it can really be wrong, but I think all the average ones I've maybe fucked up. This one is probably also fine as well. Yeah, I think it's these 3 that are a bit staircasey. I've broken. I could be wrong. They could be exactly how they're meant to be, and I just don't remember what the numbers were. But carrying on, our weightings have changed quite a bit, I guess. Tesla and Apple still rocking their highs. Somerset is no longer there, and Westpac has taken a step back as we've sold. Our highest risk, well, I don't even know if it's the highest risk, but our perceived highest risk stock of the monthly high dividend yield is making its way to the top. I think it'll probably get to 3rd place I don't know if it'll get there by the end of the year, just based on these other ones. Probably capital appreciation's a bit better, so based on value, they won't get there. But based on investment, it'll probably get to 3rd place by the end of the year, just because I am enjoying the monthly dividends. It's a little tempting to invest into, even though I don't really know much about it. But we'll continue to prioritize Tesla and Apple, and spreading the rest through the rest. Somerset, I actually updated this on the 3rd, so Somerset is actually still there. We'll update that in the background. But yeah, we've seen Tesla take a big loss in its weighting based on value. It was sitting in the 40s, 42%, so now it's back down to 36. and that's just based on the stock price being a bit of a bugger. But I'm actually enjoying that because then I get the cheaper stock, and I actually don't think it should have dropped the 8% after the delivery report and AI day. The deliveries and production was as expected. The media is saying it's 5%, but they purposely didn't do their delivery rush just based on the economics of it and the fact that they don't need to prove to like insurance companies and credit facilities that they can actually make money. They've proven that, so now they're actually just getting the numbers right and not doing a big rush at the end of quarter because it actually loses them money in the long term. And they've said all this, so it was as expected. The cars were all sold, they just weren't delivered, so I guess they can't report the sale into the next quarter, so it's fine. But yeah, in terms of our dividends, it's looking beautiful. They're all swinging up, and some of them are looking a bit more exponential than the rest, which is quite nice. Hopefully a bit of compounding the difference of cost to yield going on there. So we've got the main freight growing very nicely. Hallensteins, this next one's going to be probably still in the 20s, hopefully in the 30s. We haven't done the calc on it yet, but hopefully it's good. Fisher and Paykel will probably be another big one, as I plan to invest on that little drop. NZX getting up there. That next one being in the 10s will make it look a beautiful chart. Somerset we can actually get rid of pretty soon, as we no longer own them, so we don't really care about looking at that anymore. It was nice knowing you. Johnson & Johnson, beauty. And then the rest, yeah. So Microsoft, it's done a 10% dividend raise, and we've actually invested a little bit more into it, so that should be probably, I don't know, $1.50 or something. Triple M, we just put another 50 in, so we'll be getting over the $7 mark. Anything else of relevance? Realty Income Corp, the month, we're going to cross the $2 mark pretty bloody soon, so we'll be getting over $2 a month, $24 a year, so that'll be really nice. McDonald's is very consistent. Same with Colgate. Apple, very consistent. Dividend raise from Apple is a little bit lower than expected, but they're doing good share buybacks, so we don't mind. Westpac will probably be lower, as we did sell out of just under a quarter of it. And then AT&T is actually going to start smashing upwards as well. And it'll be nice when the Vanguard Total Bond Fund is over $1 a month. That'll be very nice. And these are all in NZD. I've transferred them over roughly. They'll be cents or dollars out just because of exchange rates and time of actually using the money. I don't know how you're meant to do it properly and how everyone else does it. I'm just doing it how I think it's right. So as long as I keep the way I'm doing it consistent, the numbers are relatively consistent in their own closed-off world. So that's what mainly matters, I guess. And then we're getting up to $5 a month as well. So we've got some mad thresholds or milestones that we're actually going to reach / break. So that will actually be really sick to see them coming in and then start the new year with some new milestones in mind, I guess. So it's really nice. I do like the colour green. Suits the money, suits the number going up. Green for go. It's good. In terms of our goal, I've actually updated this very recently. That is the wrong date, so I'll get rid of that. We've invested 20,107.02, and we've got a little bit to go. I'm not sure if this number's right because my Sharesies goal is telling me something different. I think I've miscalculated something because it's telling me I've got 1,443 to go. Whereas this is telling me I got just under 900. So I've either got 75 a week to go or like 111. I think I'm going to have to go through my wallet history and add them all up just to make sure, which will be a bit time consuming. But there's a big $500 gap missing there, so I'm not sure if I accidentally included some selling as investment or something. I've done something wrong, but you know, we're not far off the goal. That's the important part. In other news, student loan is decreasing. We want that to decrease as slow as possible because it is interest free and has very low fees. So we like to just ignore that for now. That is actually that now. So decreasing that. Our net worth over time, we experimented. I went back from before I turned 18 all the way back to my bank account creation, but I don't know exactly when I bought my car. So the number kind of went from like $50, $100 sitting and being like positive. It was like I had like $50 maybe a month kind of positive when I was a kid. And then suddenly it just goes boom, negative 7,000. So it kind of just was pointless to have all those numbers there. So I'll just leave it at when I turned 18 because that's, I guess, the most important kind of point. So yeah, I think we've maxed. I don't think we'll, apart from when we do the house stuff, I don't actually know how I'm going to input this into here. I guess I'll just go off market valuations and whatnot. But in terms of without a house and whatnot, I think this will be the lowest point we go to, assuming nothing terrible happens, which we don't want. So we've actually been increasing our net worth over time, which has been nice. So this includes the stock market fluctuations as well. So it's not a kind of true net worth, as there's the unrealized gains and there's fees and yada yada yada. But it's a good gauge. It's good to see that back. I think that's kind of end of the year. Once I was moving out, paying bond, starting to pay rent in Queenstown, earning a little less than I am now. So kind of peak loss there, and then we've just been lowering that over time as well. This little increase here is when some mates came from Aussie over to Queenstown. We went snowboarding and had a good time and all that. So that's why that increase there. And this actually decreased a lot here. It's just the stock market did big iffy, I think. And then we've just been decreasing quite well as well. And then I think we'll be getting under 8,000 as well down here. I was a little scared for this month because ACC gave me a bill of over $400, and I was like, what the heck? There's no reason for that. I called them up, went on hold for an hour, and sorted it out. It was actually meant to be $2.50, not $420. So, that saves the wallet a bit of trouble. We bought a bit of work clothing as we started our job at Rostron Finance. So that will be another reason why it kind of stayed consistent. The stock market went down a tiny bit. So yeah, it was actually mainly just the work clothing, and also wasn't working between end of June to mid to end August, sorry. So that'll actually be the main factor. Whereas here I've been working for full month kind of thing, so that'll be the big difference there. And so it'll be actually nice to see the October one getting under 8, maybe even under 7, depending on stock market and also our spending habits. Other than that, I think that's a good overview of what I've been up to the last few months. Lots of it has been deep diving into houses, like did a lot of research on sections, all the legality around that, trying to build or get a prefab, transportable home, tiny house type thing down, what the lending situation was with that, deposit. It gets complicated fast, especially with developments when they've got their own covenants and rules and stuff, and then, it got complicated. Kind of just still watching these to just see what they're sold for. This my brother was looking at, and I was also kind of keen on it. Possibly a good opportunity considering the price, but you never know, could get something better. So we've actually looked at those two. That one's sold before I was actually ready to start looking. I was just researching, so a little sad about that. It was quite a nice one. And then this was just a bit out of location since I don't have my license or a car anymore. This one was not really a viable option unless it didn't sell for a while until I sort myself out. Whereas these other ones were within bus range and whatnot. And then these ones, I've looked at this one. Wasn't a fan of the external maintenance. The roof was pretty unhealthy looking, and the weatherboards, rotten floorboards underneath, because you can actually look under. Just the price for what it was and the quality was not quite there. We liked the house design and the location and stuff. The photos make it look mean, but there's a lot of different problems with it. This one was actually quite mean. It's absolutely massive and an amazing view, but actually it just got taken by some buyers who came in and just went boom and swept it up. So I think with this one it gave me a good gauge that I'm looking at the right things in terms of value compared to cost. And then this one that's been for sale for quite some time, I don't think that's actually the right date as well, is actually kind of a good gauge of if we don't like it and it's not selling, and we like it and it is selling, it's a good gauge for what we're looking at, and kind of just means we've got to learn more till the point we're ready to jump on something. This one was just not really our type. The room flow was pretty terrible from indoor outdoor, and just felt crammed a little bit as well. Just hallway was a bit all over the show. Pretty nice otherwise. This one's no longer on the market. I've been contacting the original seller, just gave a wee door knock, because it's quite a nice renovated place. It's right beside church though, so some downsides. And then some of these are just watching out of curiosity. Like, I know that person, just curious, and it's in the similar area to where I'm currently living. This one's just a cool A-frame house, just curious to what it goes for. I don't think I'll ever be able to afford it. That one was for sale, no longer is, similar to that one. This one, I think, is another one where I'm just curious. It's a 6-bedroom beast that kind of looks funky. Yeah, this one's just a massive monstrosity of design. I'm just curious to what it goes for, really. This one I was keen to actually look at, but it recently sold, a few days ago. Same with this one, sold a few days ago. Quite nice interior on some of these. This one I haven't actually got around to looking at, so don't know about that one. That one we're looking at in the weekend. This one I think is a bit out of price range, considering asking prices up there. Always keen to lowball something lower than what they're asking, not lowball based on value, because that's been a bit dicky. But might give that one a viewing if a viewing pops up. It's quite a nice interior based on the photos, and the exterior looks well done, but the area I think is the main downside for us. We're not quite a fan of that area. This one I haven't had too much of a look at, but could be keen to look. And then this one's just kind of a cool castle type vibe in Mosgiel. Don't really want to live out there too much, but just curious again for what it goes for. That's just based on homes. I've got a lot of stuff watched on Trade Me and whatnot, but we'll save that for another time. So in terms of portfolio, our dividends have been pretty amazing. We've been outdoing August of last year and the year before, outdoing September of last year and the year before. Even with that Hallenstein's dividend chipping in the September, still overdoing it. This is the end of the last month of each quarter, so these are generally the biggest ones. Is June, I think it's March, June, September, December. They are generally the biggest of the steers, ignoring Hallenstein's as usual. They are the biggest of the steer. So December will cross hopefully 75 or even more, and cross the 100 for the overall quarter. That'll be good. And actually, I think it's iffy. I think we might get to 300. I know our goal's 333, but kind of overlooked the number a bit there on expectation, just because Tesla doesn't pay a dividend, and AT&T cut theirs a bit. But enough of the excuses. I think we're going to strive for 300. We'll see. I think we've got good odds. Hopefully November doesn't come as short as it is one of our smaller ones. Hopefully we get over. August was a little bit low, so hopefully we can get to 15. I don't actually know too much about what pays in November, so we'll see. But yeah, it's been a busy 2 months, really. Also, actually, I'm doing a course on financial advisory. So I think I'm doing like the New Zealand Certificate of Financial Services Level 5 or something, the NZCFS or something. So I've been doing that the past 2 weeks while working as a finance broker, so I've been pretty full on, taking a lot in, going back and forth with 10 different agents and banks, multiple banks, and just doing a lot of admin, and on top of just playing the odd video game, cooking dinner, doing all the chores, normal life stuff, playing some video games, hanging out with some mates. Just haven't been prioritising the YouTube and the shares too much, which is good. Having a break, having some life. So I thought I'd bring it back. Been trying to do a video the past week, but just been piling on some other stuff. So we finally got around to it, got the priority there today. So hope you guys haven't missed me too much. You're still sticking around, enjoying the dividends, enjoying the portfolio updates as usual. Hopefully during summer when I get some more time off, I think I'm going to Aussie for a wee business trip, and probably get some time off around all the stat holidays around Christmas and New Year's. So probably have an extra video or two in there, depending on where life goes. But yeah, it's been a good update. Hopefully your portfolios are not dragging through the mud too hard. Hopefully you're still doing alright. But yeah, we'll put the rest of that into Realty Income Corp or Coca-Cola or something, and we will see you hopefully not in too long. I think I said that right. Hopefully in about 3 weeks, 4 weeks, we'll do another monthly update. Maybe something in between if we don't get too busy, but we'll see how we go. Yeah, Tesla, if anyone wants to, hit me up on the email or message me on my photography Instagram, talk about some Tesla AI stuff or just, some general stuff, feel free to. Always love a good chat about Tesla. I actually have almost financed a few Teslas through work, so that's been actually quite funny. Yeah, how everything all lines up. Small world, big world, the story. Yeah, cool. Alright, that's it for me. I'll catch you guys next time. Happy investing as usual. And I guess at some point in the future I won't be going, I'm not a financial advisor, don't take this as financial advice. I'll be going, I am a financial advisor, but still don't take this as financial advice because I don't know what I'm doing. That would be, I guess, a funny contrast to most financial YouTubers going, I'm not a financial advisor. I actually will be one. I probably have to learn a bit about the legality around my YouTube channel now. Like maybe I can't make videos anymore. I don't know. I'm still learning. That'd be a bit sad, but we'll see. Yeah, but enough chitter chatter. There's probably a half an hour video by now. I got no reference. I like my unedited rambles. Yeah, keep to it, guys, and we'll catch up in the future. We'll keep these dividends rolling in. Aim for 300, and we'll see you next time. Cheerio.